Well, we had a lot of economic news out this week, especially yesterday and today. And the most important being the jobs, and nothing to write home about there. The economy, the stock market is improving. I should say the economy is improving. The stock market's in its corrective phase still, but I have a feeling we are getting close to the end of that corrective phase. The economy is not going to pick up until we end the election, which is coming up next week, and the Congress and the president, whoever the president may be, deals with the fiscal cliff. Once that issue is behind us, that will give confidence to corporations who have slowed down their corporate spending since the summer. Why have they done that? Because of the uncertainties. And there's still uncertainty in the banking industry. There's still uncertainty in the healthcare industry. These are two very large sectors that are holding us back from producing better jobs, more growth. And even though the one area that was really bad, housing, is improving, it's improving from such a low rate that it's not a big enough catalyst to really spark good job growth and strong economic numbers. We're looking at a 2% GDP probably for the rest of the year. I mean, we only got one more quarter left, and that's about where we are. So don't expect anything that really happened in the economy until after the first of the year. The stock market, we're probably going to have our year-end rally, but it won't happen until Congress and the president start addressing the fiscal cliff in a serious way. And that will probably happen, my suspicion is probably happen after the election and before year-end, that they'll address it. I don't know if they'll solve it. They might just push it back a few months. The market will like that too, because the new president and a new Congress that then can, which will be, in place in January, they can address the issue with the new senators and whoever the president is going to be. So don't be depressed. This is a correction phase in the market that we totally anticipated and expected, and one that you buy. You don't sell this. You buy into this corrective phase because the stock market itself, in general, is fairly inexpensive. The S&P 500 PE ratio is like 13. Earnings season just ending wasn't the greatest, but it was still net increase in earnings. It just weren't increasing as fast as they were the quarter before or the year ago quarter. But increasing earnings without moving the S&P 500 up, in other words, it's correcting coming down, means that the PE ratio is getting lower, and the average PE over long periods of time is 15, and today we're sitting at 13 and going down. So for the future, it looks like we'll probably get a rally. Just how much, how strong, and that will probably depend on our politicians.
If you're an iPhone user, there is now an easy way to get InvestTalk delivered right to your iPhone or iPad without having to sync the device to your computer. This feature can allow you to listen to InvestTalk right away, as soon as it's published every weeknight. Here are the easy steps to get this done. First, make sure you have installed the latest iPhone update. You then can download the podcast app from the App Store. You can do this as you would add any app on your iPhone or iPad. Once you have the new podcast app installed on your device, if you're not currently subscribed to InvestTalk, just search for it in the search box. And remember, there are 2 T's in InvestTalk. Make sure your subscription is turned on and the auto download is also turned on. Your episodes will now be delivered automatically as soon as they're published. Let us know how you enjoyed the InvestTalk podcast, and do us a favor, leave us some feedback on the podcast in the iTunes Store. We love hearing from you, and thanks for listening.